Kenya, though, has dropped 7 places in a global ranking of governments in readiness to adopt artificial intelligence in public services, according to a newly released annual index report. According to the Government Artificial Intelligence Readiness Index by Oxford Insights, Kenya was at a 78th position out of 160 nations with an overall score of 45.5, down from 71 out of 172 at a score of 43.6 in 2020. The index measures how ready governments are to implement artificial intelligence in the delivery of public services using the right tools and the operating environment for economic development. Joining us to discuss further is Erick Mokaya, the founder of Mwango Capital. He's in Stockholm. Erick, good morning to you. Thank you so much for joining us. I want to start with the Nairobi exchange, though. What's behind the increase in foreign portfolio equity outflows for the fourth quarter?
I think this is an election year, so it's not surprising that foreign investors would want to be out of the market, given sometimes the uncertainties that have prevailed during previous elections. So I think that would be the main contention, but also, I mean, generally, the market has not been doing well this past January, so around the world. So it could be also investors trying to maybe flee some markets and be able to maybe realign themselves before they come back into the market, I would say. So I think that would be the main driver of these kind of outflows of investors from the stock exchange. But I think not much to worry about. It's a regime change. So from Uhuru Kenyatta to whoever the new president is going to be. So that's going to be interesting to watch going forward into this year, I would say.
Oh, okay. So as far as, so it looks like it's temporary. You're saying there's not much to worry about. But is there an impact of an increase in foreign portfolio outflow, foreign portfolio equity investors from the exchange, though? What's the impact there?
I think it could be significant given that there are pretty heavy investors in companies like Safaricom. So I think that can affect because we've not been able to get a lot of local investors into the market. But again, we're trying to drive more local investors to actually go into the market so that when foreigners remove their cash from the market, they still local investors who are able to uphold that. I think that's where maybe the NSC and the CMA need to come in and be able to reduce some of the fees so that people can trade this stock, trade stocks a little bit more. The good thing at least is that they launched day trading at least last year. So I think within 2 months, they've been able to get substantial volume. So it accounts for around 3.4% of the total volume traded between December and January this year. So I think those are promising endeavors that the stock exchange and the markets authority are trying to initiate to kind of revive their local participation in the local exchange. So I think in advanced markets, you see a lot of local participation in the local stock exchange. So I think that would be something that we would love to see replicated in the Kenyan market. But generally, I would say this is significant that they are having outflow. So I would bet that they are flowing out of the big companies like Safaricom, which are also significantly impacts the performance of the index. So maybe that's why the index was not performing very well in January, I would say. But that's in line with global markets again. So nothing really to worry people too much.
All right. And as far as, I guess, the balance between foreign and domestic investors, can domestic investors pick up the slack? We saw something similar here in Nigeria, actually, as far as that balance is concerned in trading.
The challenge, of course, is that the local investors have also been affected by the economic performance of the company. So I saw, of the country, I saw that you highlighted that it's 5.4% GDP growth. I think these numbers are really not translating to what is on the ground. You saw inflation, I think in January, or I think December should be around 6% there. So I think I don't think the local investors have that much money left. Year-over-year growth in terms of basket. I saw a statistic that showed that goods that cost around 1,100 Kenya shillings, a basket of goods that cost 1,100 Kenya shillings, that's I think $10 back in 2012, now costs I think 70% more. So I think that tells you that there's been a significant impact on people's revenues and how much money they have. Or how much disposable income they have to even think of investing in the stock exchange. So I would bet that there are very few local investors who can pick up that slack for now. So, but again, not much to worry about unless it's significant. These outflows become significant in the coming months. It's still not much to worry about for now.
All right, Eric. So for an investor that's looking at the Nairobi exchange, what sectors and stocks are attractive? Is Safaricom the big catch there? What other stocks are there to look at?
Right now, we're looking at Safaricom is financial year ends in March, of course, and then they will be reporting the full year results going ahead. So the results, we should expect them around in March there. So for the full year, so I think that would be interesting to watch. I actually can't remember well when the results for Safaricom should be expected, but generally, I think some of the companies that you're looking at are companies like, say, Centum, who may resume the payments of dividends this year. We're looking at banks, especially headed into the full year reports are being issued in March this year, given that the financial year ended in December. The other companies that you're watching, actually, which I've also been spending a lot of time checking out, are Tanzanian banks. The top two, NMB and CRDB, they had a spectacular performance in the financial year ended December 2021. So those are very interesting companies to check out also. But across the bourse, there are some interesting companies. And of course, the stock of the year has been Mekan General, which was up, I think, almost 100% in January itself. Even though it has come off the highs, it's still a significant stock to kind of keep an eye on, but on very low volumes also. That's a challenge you have. Some of these stocks are actually moving on very low volume, I would say.
All right.
But generally, I think just across board, banks, I think, are the most eagerly awaited for next month as they start releasing their full year results for 2020. So trying to see the matchup between Equity Bank and KCB, how that's going. We just saw the results for KCB in Tanzania, really good performance. Diamond Trust Bank in Tanzania, very good performance. So just looking to see whether that actually translates. So the main companies like Equity, KCB also performing very well going this year. A quick statistic I actually saw yesterday was KCB is up 26% year over year. So like in the past 1 year, so it's up 26%. So pretty significant, given that also Equity was actually also a very good performer last year. So banks are good places to check out also.
All right, Eric, very quickly, I only got about 30 seconds. The 5.4% GDP projection in an election year, very quickly, what do you make of it?
I would not read too much into that. It's just a number, and again, we are coming off. Remember, it's been COVID the past 2 years, so when we're coming off a low base in terms of performance economically, so I would not read too much into 5.4%. I think that's a year-over-year increase, so it doesn't make much of a difference to the local investor, I would say.
Erick Mokaya, founder, Mwango Capital, thank you so much for taking us through the Nairobi Stock Exchange and, I guess, GDP projections for the East Africa's largest economy. I appreciate your time. Thank you so much.